The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, going back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN, TFNN.com, and bringing the show to you also live inside the e-Signal platform. Let's check out where the markets are at right now, where everything's headed, and pull a few things up for you. Right now, we got Nasdaq, looks like it's moving on back towards settlement. Had a nice little run on up, but looks like it's pulling on back right now. And let's see, Nasdaq right now currently is up 16 points on the day, and but it looks like it might have a good chance of pulling on back down. We'll see. We'll keep an eye on it, and if it does, we'll be looking for a target on down to 41.65. So it looks like it's going to oscillate right around where its previous resistance was right there, and if it can bounce and break through it, we'll have a good trade set up. Going on over, looking at where we got on the S&P, it's up 3.75 points. We got the Russell is currently down 2, and we have the Dow is currently up 68 points on the day. We got gold right now is down 5 points. We got copper is slightly in positive territory. Oil is down 40, or is that $1? Yeah, $1.82. Pretty big move down on oil. And looking on over at natural gas, it's also negative territory, down 0.045. We got corn is currently down $4. We got soybeans down. Let's see, corn down $4. Soybeans down $7.75. And looking on over at dollar index right now in positive territory, up 0.359. We got euro dollars down 69 pips. Euro yen is down 12, and euro pound is down 48. Pound dollar currently is up 15 pips. Pound yen is up 116. Dollar yen is up 58. Aussie yen is up 23. Aussie dollar down 2. Looking over at dollar franc is up 85. And we got the dollar CAD is currently up 42 pips on the day. And let's see here. Like I said, NASDAQ looks like it's trying to pull on back down. And we'll see if it can make it down and bust on down. Just get some good volume. Let's see if that volume builds up. As it continues to decline, if it can keep that stage. Let me go ahead and bring a chart up. I'll show you where it's at right now. So to see it sort of, it's been moving down. It's had its oscillations up in the process. It's had a little pullback right there. We'll see if it can make it on back down. I don't know if it'll make it all the way back down to settlement, but at least down to the lower level of ICE from yesterday. We got 41.65 right here. It's where it made it down this morning on the morning trading session. We can go back and look at it. Sort of came down, bounced up, went through that point of control center there, right there. I'd come on down to it, and then doing it again. So we'll see. Another key level to look at, just where it was at this morning, earlier this morning, and right over here. So it's being another level, just that it may have a little resistance in, and see if it can. I said, can it pull itself all the way back? And we line that chart back up. There we go. And we'll make this a little thinner, so it's a little easier to read. There we go. And I'll move the chart up, give us a little more perspective. And we're looking for it to break down. I'm looking at the 41.60, 41.90 contracts as being a good potential contract to short. It's pretty much right in the center of that. They're 30 points wide. You can get them right around 41.74, 41.75 right now, right in the center of them. So like I said, right in the center, plenty of potential profit to move on down, and also close proximity. The other possible option for it would be the 41.50 to 41.90. They'll actually move a little faster on the way down if it keeps moving on down for you, and could provide, like I said, another good setup on that trade. So again, 41.60, 41.70. Let me show you that contract, the one I'm looking at, and right here. All right, again, the 41.60 to 41.90. So, and I have another one, a little bit of premium collection on the side. But that's the sort of the main one right there. I'd either choose this contract, or if you wanted to get one that's going to be even a little bit faster, another good contract actually, probably even a little bit better. You'll get a little bit more tick for tick. Got to put a little more cash though, and that's the 4150 to 4190 contract. So one of those two would be the ones to check out. This one's trading a little bit more on, as you can see, more on par with where the market's actually at right now. So may want to check those out and see what you can potentially pull off on those. And we'll see if it can it break on down. I know it's trying to right now. We'll see if it has the oomph to be able to do it. And sort of taking its time right here in the afternoon. But like I said, plenty of profit potential for it to be able to go on down. It's just oscillating right now, right at this level. And we'll see if it decides to turn around or if it decides to pull on back. But that's the trade, potential trade setup just at this moment. It's already been short, so it's just sort of oscillating around that area right now. We've been short back here since about 41.77. And, we expect it to, pause along the way. That's just normal. That's how the markets move. Unfortunately, they don't move in that straight line, which we'd all love it if they did. But they don't move in that straight line, so you just got to sort of watch them and see if it's going to give you exactly what you're looking for. Okay, so what else do we have that we could look at on the day? And let me pull up some of my headlines. We'll go through those. We'll check out where we're at on news. And, we got and one thing I want you to notice, I'm going to step back for a second here. Look at the price, 41.74, okay, versus 41.71. So this one is tracking much closer. The market's like at 41.72 right now. It's pretty much, within a couple ticks, right? A couple points, or a point or so of where that market is. So it is going to move faster. If you decide to do that trade, that'll move faster than this one will. This one, you're actually able to sell a few points higher than the market. But with the kind of volatility we've had lately, premium is awesome, being in your favor, but it also, it doesn't just decay out as fast. So, you're not going to make it so much on time decays. You're going to be about selling it higher, so you have a little bit more cushion on the being right side of things. Okay? And so, anyways, we got a little bit of movement. We're going down. We'll see how fast these move in the process. But let's say if we get on down to 41, we got 65 over here. I'm going to see where these two different contracts end up. This one should be basically about 41.65. Should have made about 50 points, $50 on that contract. And this one will probably be about 41.70. So probably still will make very similar to the same amount. The one main difference is it will not have that full value, but it still should get about 80% of the value because it's in the middle of the spread. So we should see meaning like in the middle of 41.60 to 41.90. So we should still see a very close dollar-to-dollar move, even though the premium is offsetting the price somewhat. Okay. Now let's go in, and I had a few headlines we can watch, so we're just sort of watching that one and seeing what it's going to do. If it goes around, we'll take it, and we'll take it all the way back to the top to 41.95. So we don't want to just sit around on it and go, hey, this is the only direction it's going to go. We will be willing to reverse if we need to on the trade. And, it can be people they don't want to lose, but it's like, you could have made 3 times as much if it went the other way, if you just went with it. So it's like, take the hit, move on, next trade. We'll see where it ends up or if it pulls down. Right now, oil followed huge. The stockpile build is just massive. Let me go in, and I have that over here. We'll go in. We'll put these down here on the side. Right there for you, so we can keep those up. We'll set that to be on top. All right, so we'll go check out oil inventories. And if we go in and look at the latest release on the oil inventories today, increased 4.7 million barrels, highest level not seen this time of year in the last 80 years. We still have that tagline. As long as we have that tagline, we should be seeing oil continue to decline massively every time that report comes out. So you should not be surprised in the least when you see that report come out right there. Okay, and it says 80 years. I mean, that's as long as we still have the highest time we've seen in the last 80 years. There should be no surprise. I was at a truck stop, and they're like, I can't believe gasoline is the same price, sometimes cheaper at some stations than diesel. Like, they're like, I've never seen that in all my life. And these are some old guys that are like, I've never seen that. And so it's really, really, really just been pushing heavy, weighing heavily on the price of oil, and been getting some big moves. Oil and gold's been great, but I mean, oil has been fantastic to trade because of the massive moves. Oil inventory day, very dangerous day if you don't know what you're doing. You want to be looking at things like straddles. Right now, with these big moves that are happening on each one of the inventories, that's what I've been looking at, and been working out really well. And showed those last week, but just some massive moves. Let's see what kind of story we got on that. I think I may have a story that came up on it. 4% drop on. Of course, the percentage is larger as the price goes down, and we get those same moves. But so that stockpile build just continues to climb up, and so the inventories just keep rising. It's the biggest 1 week rise since April, and that's big. But the biggest thing is, like I said, it's still the highest, levels we've seen in 80 years. Brent crude dropped 8% yesterday. So in a 25% 3-section surge, the largest 3-day gain since 1990. So, I mean, just absolutely massive moves. And I think if you're trading oil outright, it's sort of crazy right now. You better have some sort of hedge or just be very, very, very disciplined, because it can flip around so fast on you. Can be very, very painful. So it's one of those things you really need to have, amazing discipline if you're going to be in there trying to trade crude oil with the kind of movement it's having, or you need to trade it with something with very defined risk, so you don't get handed to you. I know some traders trading yesterday were starting to hop on the spreads for the first time, and they were enjoying it. So check those out if you haven't already. Gold has been, going, easing a little bit after the last 4-day gain. So, of course, waiting on the signal on the U.S. rates. What is happening? So all the clues are waiting. Everybody's waiting to see what's going to happen over the next couple of weeks. We're also looking at the Jackson Hole Conference and what's going to come out on that. Payroll numbers, of course, tomorrow are coming out. We got, unemployment claims, and then we got, NFP is going to be coming out soon. So all the different, things that are coming out, they're going to be looking at that. And that's going to have a very, very heavy impact on gold. So they're watching those numbers. So let's see here. We got European shares moving on up. China moves, and the U.S. data helps. But some of the intervention helping calm the market jitters and traders. Intervention over there in China, and sometimes it works and sometimes it explodes, as we've seen recently. So China has really been giving us a lot of volatility. Stay there. We'll be right back.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All righty, folks, we're going back here to the Diagnostic Trading Hour. And so we're checking out just a few things, seeing where the market's at right now. We're watching the NASDAQ, seeing if it's going to break through or if it's just going to stay in this oscillation zone right now during lunch. And if it breaks up, we're looking for a move back up to 41.94. If it breaks on down, we're looking for a move down to close to 41.65. So, either one could be good. Just got to grab it and take it and go in that direction when it turns around. So let's see here. What do we got that we can also focus on in the meantime? We're going in. We're looking at oil and the massive moves that have been happening. We're talking about China trying to calm everybody down. Some possible positive U.S. data. The ADP National Employment Report showing U.S. private employers adding 198,000 jobs in August. So against the expectations of 201. So will that negatively impact the Fed's meeting in the middle of September? So the market really wants to, get any kind of data it can to support its theory, and what that means is that the market will probably be more volatile on news reports. So just be aware of that. It will not be surprising to see the market again be more volatile on news reports because it's sort of looking for, basically validation of, the claims that it's making that the Fed will, raise rates or will not raise rates, and so it's going to be more sensitive to that and that process. And let's look over. So, one of the questions you would be is, you want to be ready. What if it's going to go to 41.94? What contract would you want to look at? you want to get a contract with really as much potential as possible in that process. One of them you could check out, just trying to go over and let you see a few different possibilities, is the exact same contract as we got up here looking at the short, and we're looking for a break below or a break above this range right here. But so if we do get a break above, you could also do that 41.60, 41.90 as a potential buy on a breakout as one trade. And we got, of course, the same contract for the break below. And then let's see here, looking on the downside, I don't really like the 41.10 to 41.90. It's going to go into, they both have the same ceiling. So this one right here, the 41.50, 41.90, I mean, both of that same ceiling. It's not going to offer you really any edge on the buy side, and it's basically going up to the exact same target. It shouldn't move really that much faster at all in the process. The only edge maybe that you get to buy a little bit lower if you do that trade. So you could also look at the, there's a wider 41.10 to 41.90, and that one's basically just going to make you put up more cash. It'll let you buy even a little bit lower. So let's pull that up. As you learn to look at these spreads, and some of it just takes a little bit of time. Just, it's not so much complexity, but just time to where do your eyes need to focus. And you'll see like 41.67, 41.73, 41.76. So all these are lower than where the market is on the buy side right now. You're actually getting a positive mark right there, be able to buy, these contracts this low. And you're making, that's like $100 premium in your favor buying this contract all the way down here at 41.67. So if you thought it was going up, I mean, that's a great positive marker right there, is to be able to, grab that contract. Like I said, actually have over $100 in premium in your favor in the process. And if it goes down, you got quite a bit of cushion helping you out too. So that should, give you just a few options to look at for, a breakout. We're getting pretty close to a breakout over here. That 41.67 price. I mean, that lets you buy way below 13 points below where the market is right now. So if you think it's heading on up to 41.94, you grab that. You'll grab premium as time goes by. You'll also grab, obviously, this profit as the market moves up. Now that premium is going to get thicker and thicker as it gets closer and closer to 41.90. It's not far off of it. So just be aware that that will make the contract itself slow down somewhat as you're doing the trade. And let's see here. What else do we got that we can do? Trying to see if there's any up. It's really trying. The markets, I see all four indices really trying to push up right now. And see if they have enough to actually break out, or if they're just dumping off that final order before they drop on back down. So either we're about to get a surge up, or I think it's going to drop off. So we got to get ready. But this next 5 to 10 minutes here ought to be a good tell sign on the NASDAQ. Like I said, we just had a lot of volume kick in on all four indices. I'm watching on my other screen, and that would often mean that it's about to reverse. Basically, it just took out a whole bunch of stops. So all the stops that were right here on the last decline pulled back up, hit all those. Now it's pulling back down. So I got to watch it now. Either it's going to go back up and it's going to surge through them now that it's taken them out because it's got rid of that wall, or it's going to drop. So we're right. This is sort of going to be a very key next 5 to 10 minutes here, and we got to see the market break out one way or the other. We'll keep watching. Stay tuned. Be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the Taz Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The Taz Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed Taz proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the Taz Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. Still having a hard time pushing on through there. Saw a little bit more of a surge. We pulled on back. We'll see how it goes. All right. So looking on over here and check it out. We need to get caught up and ready for our news that's coming up this week. So what do we have on the list? Well, tonight we got our Aussie retail sales. Okay, again, tonight we have our Aussie retail sales reports. I want to put those tickets back up just so you can watch if you're looking at the price change and how they can move right there for you. There we go. On the different sides. Okay. So, Aussie retail sell trade balance news coming out at 9:30 tonight. So, looking at an entry at 9 o'clock for the 11 p.m. expiration for a $30 minimum profit. There's an iron condor there on the Aussie dollar when that gets released. We also are going to have, let's see, we got the pound services PMI coming on out for a release at 4:30 this morning. And so we'll be looking at a 11 p.m. entry tonight for 7 a.m. expiration tomorrow for $35 minimum profit on that trade. And we got one more. We got the Euro retail sales coming out at 5 a.m. And we'll be entering at 11 p.m. looking for Centium also for $35 on the Euro. So again, that's the Aussie dollar, $30 on that one, 9 o'clock to 11. And we got the Euro and pound. Looking at an 11 to 7 for $35 each. that'll cover your news for this evening. And then going on over and looking at the euro minimum bid rate is coming out tomorrow morning. So with that bid rate coming out tomorrow morning, we'll be looking at, usually there's very little movement until if they do a press conference. So let's look over and see if they got a press conference. Looks like that's moving on to 41.90 for us. Going on in, and let's look and see on the press conference for tomorrow. ECB press conference at 8:30. And let's see here. 8:30 a.m. tomorrow. That's the big move. So be aware that let's see here. So if we go in and look at this, let's pull in these real quick. Usually we'll be looking at a straddle, and I'm just sort of pulling up some of the last dates. But you want to be very aware that you want to be out of it before that press conference happens. So if we're looking at the euro minimum bid rate, you can go in and you can grab that, but make sure it's usually like it barely moves at all. Okay, again, barely does it ever move at all when that bid rate comes out, unless they surprise the market with something. But it can definitely move quite a bit if it comes back in the other direction on us. And so let's see if there's a good way to play that out. Basically, get in at 8 o'clock and look for a straddle immediately. You can look for at 10 o'clock. You can look for a little bit later one if you want to. It's going to come out at 8:30. So give it a solid hour, meaning you need at least a 10 a.m. expiration, if not later, when choosing this trade. Okay? And let's see here. What else do we got on the roster? Going in, just pulling several things up and seeing what we can put together. Moving towards that 41.94. Might be looking to tighten some stops up here as we move up into this area. If you're taking the long trades that we had down here, down at 41.65. So now at 41.70, it's about $50 profit you could have locked in since we pulled those tickets up. And 41.70, I think I had to reopen that one. I hadn't moved too much. Okay, so going back in and looking at that, we got oil, we got dollar index. Markets have done, since a mini crash last week. Indices have been moving quite a bit for us. FX has been having great volatility. So hopefully we've been able to take advantage of a lot of this volatility. We've had some, big moves just taking off. There it goes. Now it's pushing on up. And we're getting that nice run up there on NASDAQ. So if you're in here on this long one over here, notice how it's moved up. But still, I want you to see this. This is a big lesson I want you to see. And notice how the price has not, changed dramatically. That premium has got a bit larger as it's moved on higher. That's like at 41.90 is the ceiling, but we're still like at 41.72. Okay, so there's a lot of premium in this bot contract. So, they're really expecting it to pull on back down. The price is not moving just massively. And that's why when you're trading these spreads, you really want to trade based on the chart. You want to understand a little bit how that premium moves, where it's going and how it works. But we're seeing it move right on up, and we got just a few points away to our profit target. When you hit that 41.94, you need to be tightening stops. If you haven't already tighten them again if you have. And be looking to potentially take some profits on that trade, but I'd be looking to tighten that stop up really soon, up to around 41.88 or so, at least on half your position. We're taking profits because we're already in that goal zone right there, 41.94. And I wouldn't be surprised to see it pull on back now down further. So we'll see if we get that pullback. If we do, then we'll have some more potentially to go short on with it. And let's see here. 41.75, 41.95, 42.05. That's another contract you could look at too. Let me bring that ticket up for you. So if you're wanting to play potentially a short pullback on this 41.75 to 42.05 going to put you right smack dab in the center of that contract, and give you a close proximity for you to potentially look at that trade. So check that one out right there as just a good potential pullback trade if it keeps pulling back. Like I said, it went right up. We hit that point of control area. We hit the institutional sell side demand area. So now let's see if it'll pull on down back from that and retrace back, or if it has any additional strength. Volume has been declining as it's been rising. So we'll see if it has much more that it can flip around and keep going or not. If it does pull on back down, I'd expect an area at least down to 4170, 4172, back into that zone right there. So we were calling either direction, and we basically said where it was going, and we got that. So now let's, it didn't get exactly to 4194, but again, within a couple point range, the zone right there, right where that 4194 level is what I'm going to be looking for. Anytime we're getting within a zone range of any price level, that's, which is it's usually a small percentage, usually within 2 to 4 points of either side when you have a big area. Oil has been moving huge. We've still got an oil volume still going on today. Let me go over here, see if I can grab an oil chart for you. I'll look at that amidst all of these other contracts we got going on. And oil breaking on down, pulling back up to ice right now, pushing through ice at the moment. And it's had quite a bit of strength in this process. And still going up, still got a lot of strength, a lot of volume. I see a lot of ticker volume come in right now on the tape. And so we'll see if it can keep going. It's pushing right up against that 0.5 deviation level. It's right where it got stuck, about 11:15. It's also where it played around about 10:30 to about 10:45, right after the release came on out, but pushed on down to 1 deviation, pulled on back up. And again, we're seeing a lot of positive, strong ticker volume on oil right now. Looks like it is breaking through with that additional volume. Pushing on up. Next price target right here, 45.43, would be the next zone I'd be expecting it to push on up to. If it can continue that strength, that's where I would say it's going next. So again, right on up there. We'll see if it has the strength to keep on pushing. But ticker volume is backing down a little bit, so it's probably going to slow down a little bit in this process. But we got 41.94 over here on Nasdaq, like we called a little bit earlier. So that's on up there. And oil, like I said, is lightening off, but I'm still seeing, buy volume coming in. So we'll see if it keeps going. But we did actually hit that 41.94 to the tick right there. And we'll see if there's any more strength left. But it looks like I see some more ticker volume coming in strong on Russell and Nasdaq, pushing high. Okay, we got S&P coming in. We got Dow coming in. So quite a bit of volume, strong volume coming on through on these contracts. We'll see if they keep going, but it looks like we got quite a bit of strength, like I said, coming in on these contracts. And, I mean, it's pushing pretty heavily, so I'm surprised we're getting this much still coming on in on it. And let's see, trying to see what we might be able to pull off. If that continues, this is at a very fundamental level right here right now. We're going to see if there's enough to keep going, or if we're just finishing off the contracts. Still seeing S&P volume come in. It's still sneaking in on the upside. So we'll see if that keeps going. If it does, then could make out for some nice trades. So you could look at that higher contract at the 41.90, 42.20 as a potential trade that have quite a bit of room in it to make a little bit of money. You can buy it at 41.92 right now. It's a little bit of premium in your favor at the same time. So we got the 41.75 to 42.05 as well. So a couple of the contracts on the upside. I'll show you those. Let me get rid of some of these. Just trying to, like I said, give you some examples of contracts you can trade these with. Oil still just surging. So moving on up. Let's see if there's anything on oil I can show you. And let's see here. Pull up oil. Let's see. It's like I said, it's moving up really strong right now. And there's plenty of contracts. There's tons of contracts you can trade on it right now. You got 44 to 45.50. So that's right there in the center. It's like a 1 tick proximity offset. Just be careful. Like I said, we're right in this area. You notice like we hit the 0.5 deviation level and we got oscillation. We hit the point of control level over here. On Nasdaq, we got a little oscillation. And so I'm trying to see if we're is it just going to bust out of this, or did it just use all of its energy right before it busted up here. So coming on into the top of the hour, how much juice does it have left? All right, so we're watching this over here and looking to see. I'm just watching these charts. I'm just looking for a good potential short reversal. I got my longs on Nasdaq, and I'm watching oil to see if it's about ready to flip back around and pull on back. If it does pull on back down, the first target I'm going to be looking at is 44.15. My first target on the way back down on oil. If oil does break out to the upside, I'm going to be targeting 45.43. So I'm just trying to give you a little intraday analysis along with the show of how I like to read and look at the markets. Okay, let's see here. What do we got? Let's see. Vegas Money Show is coming up. So if you're, I'll pull that up over here. If you're going to be in Vegas in October, like I said, they got the Money Show coming on out. Love to see you all be out there. I'm sure Tommy's going to be out there. And of course, Nadex will be out there. A lot of people will be out there. And just go to Las Vegas Traders Expo. It's free to attend. It's free to register. Ton Savsnoff will be out there. A lot of guys will be out there. And so you can come out. You can meet us. I'd love to meet you, shake your hand, and to say hi. And it'll be fun. It's going to be at Paris this year. And again, it's October 14th to 16th. Okay, so again, October 14th to 16th. We're looking at, and then I'll be out there along with a lot of other people. And like I said, the entire show is free. So they do have some paid events as well, but it doesn't cost anything to attend it. And you will get more information than you can handle. So just focus on things that you're interested in. They'll have a bunch of great topics, and I look forward to seeing everybody there. All right, let's see. What else do we got going on the list here? We can also check out some more of the news trades that are coming up. We got the NK futures are rolling on over, so make sure you roll that if you're using that. All four indices are rolling next week. So we are moving into roll right now on NASDAQ, Russell, S&P. So all that's coming up here in the next week. So, volume, and applied volatility. Applied volatility will probably drop a little bit. Because we'll be going into, we have the Labor Day weekend, and usually we see the markets push up quite a bit, decent amount during Labor Day weekend. The one rarity of that was when we had, Hurricane Sandy, and that affected everything, of course. But normally the markets are pushing positive during that Labor Day week, and then they're just sort of oscillating around for about a week, waiting on the Fed funds rate to come out, especially the September one, because that's where the Fed likes to mess with everybody's head. And then flip on back around. So, and actually usually drops middle of September. And there's a lot of seasonal cycles going into that. And after that's over, then we often see the market go ahead and push on back up, and usually into the end of the year. So unless there's some sort of major crash that happens after that September drop, which, it can lead into a big crash. So unless that happens, then we should see, like I said, the market pushing on up to the end. Start there. We'll wrap up a few more of these news trades for you, okay? Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All righty, folks, welcome back here to the Diagnostic Trading Hour. So we're just checking everything out over here and seeing what the markets hold for us. Going in, we walk through the stuff for tonight. Like I said, we got the minimum bid rate tomorrow, and then we have the ECB press conference. And let's see, looks like I got it on the list, but it needs to be made into a straddle. So we got that right there. We'll have, of course, weekly natural gas inventories tomorrow as well. U.S. trade balance also often works out as a good straddle. You can hop in at 3 o'clock if you can get a straddle for around $40 on euro dollar. And the CAD trade balance, that one a little bit shorter, about $40 at 8 a.m. to 10 a.m. So when the move happens on that one, and then often it pulls on back. So check those out. That's on the dollar CAD right there for 8 a.m. to 10 a.m. And then, of course, we got the weekly natural gas inventory. You can look at straddles, strangles, butterflies, etc. on these reports. And then going into Friday, we're going to have the U.S. unemployment rate, NFP, coming out this week. Obviously, you're going to be looking for a lot of clues into how that's going to impact everybody. And so that could be a big mover. There's a lot of ways to play straddles and strangles. I list them all out there for you. I go over these each time on the show. And basically, we're looking for moves of up to 100 pips on the euro, 100 pips on the pound, 75 on the dollar CAD, 92 on the dollar franc, and dollar yen 80. So with those numbers, you can look at potential butterflies, condors, straddles, and strangles, and to see what pricing makes the most sense. Okay. Let's see here. We got some FOMC members speaking on Friday morning as well. That could add a little volatility considering what's all is going on. Let's see. And let's see here. What else we got for next week? We're going to have, just to get you caught up, because I'm going to be out for a couple days. Felicity is going to be having our National Rodeo Club Series, so they'll be out for a few days on that one. We got Aussie Home Loans coming out at 9:30 on Tuesday evening. Looking for a 9 to 11 expiration for $30 minimum profit on that. And Pound has a variety of reports: manufacturing, production, trade balance, and industrial production coming out. Looking at 11 p.m. entry for a 7 a.m. expiration on that one for the 4:30 release, and $35 minimum profit on the pound dollar. And then going into Wednesday morning, the pound interest rate will be coming out on the 9th. And so usually a pretty flat move, actually, when that comes out. It's better, this is a tip for you, it's better when the euro comes out right after it for being flat. So there can be a little more volatility when you don't have the euro following it immediately. But normally, we look for about a 30 pip maximum move when the pound rate comes out. CAD building permits coming on out at 8 a.m. to 10 a.m. expiration, $30 minimum profit. And we got Aussie employment change coming up next Wednesday evening. Looking for a 6 p.m. entry for an 11 p.m. expiration and a $35 minimum profit on that trade. And that is pretty much it. That's all we have lined up for the news here for the next few days. Looks like got the Nasdaq still breaking out high, not pulling back yet. Looking for a good short. We hadn't really got a great short confirmation on it yet. We got a continued long to continue going. And where is it going next? That's the next question. Like I said, I got oil moving on up. I said if it moves up, we're looking for a move to 45.43, and we are just about 10-15 cents off of that right now. We got NASDAQ probably looking for a strong move. If we continue the strong move, we'll be moving on up to 42.25.25. And that should be the next target right there on the NASDAQ. All right, y'all have a great day. And I will see you next Wednesday right here on the Diagnostic Trading Hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.